Today we're going to be discussing the financial situation of Dollar Tree as assessed by Team Craven. When it came to deciding a superhero for our team, we found that none of the team members took any particular liking to a certain superhero. It was upon researching a little about Dollar Tree and stumbling upon a corresponding theme amongst a superhero that our team name and tagline came together. Craven is considered to be the world's greatest hunter, and although a supervillain in the Spider-Man series, we felt the correlation of hunter was too good to pass up. Dollar Tree's current tagline and the first thing you see on the About Us page of their website is "It's all about the thrill of the hunt." It was only appropriate to adopt their tagline for our own. Our team is comprised of individuals throughout the United States: Arun, Pamela, Maggie, Tori, and Chad. Dollar Tree, Inc. is an American chain of discount variety stores that sells items for $1 or less. The company also operates multi-price point variety chains under the Family Dollar brand, which Dollar Tree acquired in 2015 for $8.5 billion. The acquisition of Family Dollar placed Dollar Tree in the number one spot among dollar stores by revenue, passing leading competitor Dollar General. Dollar Tree competes in the dollar store and low-end retail markets. Each store stocks a variety of products, including national, regional, and private label brands. Departments found in these stores include health and beauty, food and snacks, party, seasonal decor, housewares, cleaning supplies, gift wrap, and more. Most Dollar Tree stores also sell frozen foods and dairy items such as milk, eggs, ice cream, frozen dinners, and pre-made baked goods. According to CNBC, from 2010 to 2015, discount retail store sales shot up from $30.4 billion to $45.3 billion. That's a nearly 50% increase, while the growth rate for overall retail sales during the same time was only 17%. Discount retail is a very healthy market right now. Between the Dollar Tree and Family Dollar brands, there are 13,851 locations in 48 U.S. states and 5 provinces in Canada. Dollar Tree is a large employer, but at the present there are 40 corporate positions, 31 distribution positions, and 2,845 store positions looking to be filled. In May of 2016, a field study was done on 500 shoppers on the subject of dollar stores. 97% of the 500 respondents say they shop at dollar stores. Of those, 34% do so often, 39% sometimes, and 24% rarely. 81% of survey respondents said they shop at Dollar Tree, 53% at Family Dollar, while 64% shop at competitor Dollar General. To understand the store, we need to understand their customers. As you can see, the male-female mix is relatively equal. People over 55 are the most likely to shop in their store, while individuals with an annual income of over $100,000 a year surprisingly make up 19% of their business. In fiscal year 2015, Dollar Tree, Inc. processed over 1.7 billion transactions. Now I'm going to pass along to Arun to discuss Dollar Tree's value proposition.
Thank you, Tori. Dollar as a customer-oriented, value-driven variety store operates toward customer intimacy and operational excellence. 13,851 across US and Canada proves that existing and potential customers have easy access to Dollar Tree stores. First core value proposition of Dollar Store is customer intimacy. The expansion of store's location was carefully considered to fulfill customers' convenience. In addition, by providing full spectrum of daily and occasional needs, customers were able to do one-stop shopping at $1 amazing price. The company is still expanding product categories, including freezing product, and keeps innovating. Dollar Tree is one of only stores that does actually provide everything at $1. It's amazing how they are able to manage constant price tag over the years. Consumers visit the store with a much broader and price range. Though products may not have more branded name with private labels, majority of products sold at store provide a quality product that is comparable to competitors like Walmart and other convenience or variety stores. The shopping experience bring imagery of shopping is fun to customers. Consumers get out of store with heavy loaded bags with full of different products, but they didn't spend as much. Employees at Dollar Store bring positive attitude and their dedicated service bring high satisfaction of customers. Second core value proposition is operational excellence. As mentioned previously, Dollar Tree stores are nearby us. Due to nature of business model with everything a dollar, the business tend to work better at offline rather than online space where shipping cost and time will be hurdle. By opening stores at areas with large foot traffic, such as at or nearby malls, or at areas for targeted customer segments, in terms of their income, stores attract customers more efficiently. When we think about price they offer, we question how can they make profit? How many items do they need to sell to even make profit? In fact, the business has been running with a pretty high gross margin of 30% above, thanks to efficiency and operational excellence. The company performs optimized distribution and logistics throughout the nation. Since merger of Family Dollar store in 2015, integration of two stores distribution networks has been a key success factor, and it is still in progress. However, merge and expansion of two physical stores as well as distribution centers is starting to bring synergy, and it's just the beginning. Now I will pass to Pamela for leadership DNA.
Thank you, Arum. So next, we will present to you a brief overview of Dollar Tree leadership DNA. In terms of finance, we have Kevin Gampler, who is the Chief Financial Officer at Dollar Tree and the Vice President at Dollar Tree Air. He is a graduate from Michigan Technological University, where he obtained a bachelor's in accounting. Mr. Gampler was previously employed as Chief Financial Officer and SVP and Controller by the Finish Line. In terms of marketing, we have Mr. Robert Sasser. He is the Chief Financial Officer and Director at Dollar Tree. Mr. Sasser is on the board of directors at Family Tree Stores, Dollar Tree, and Dollar Tree Air. Mr. Sasser is a graduate from Florida International University and obtained his bachelor's degree in marketing. Previously, he served as the Senior Vice President of Merchandise and Marketing by Rose Stores and also Michael's Stores. In terms of merchandising, we have Michael Witsinski. Mr. Wyszynski has a bachelor's in business administration from Benedictine University. He brings 34 years of knowledge and experience in retail, hence his role as Chief Operating Officer for Dollar Tree. Mr. Wyszynski oversees the strategic operations and real estate of more than 5,000 Dollar Tree stores in the US and Canada. Prior to joining Dollar Tree, he served as Vice President of Merchandising and Marketing for Cub Foods Supermarkets and also held many director positions in marketing, operations, and logistics. Also, with extensive experience in merchandising and marketing, we have Robert Rudman, who is the Chief Merchandising Officer at Dollar Tree. He has held this position since June 2003. Prior to joining Dollar Tree, he served as President and CEO and minority shareholder of Horizon Group USA from 2000 to June 2003. Mr. Rodman was also a president and CEO of his own consulting company, which is called VQ International. Prior to joining all these different companies, in addition to Michael's, Mr. Rodman served in numerous positions in a wide variety of retail formats, gaining stores, and has a majority of his experience in merchandise and marketing. In terms of supply chain, we have Gary Maxwell, who is the Chief Supply Chain Officer at Dollar Tree. He previously worked as SVP of Merchandise Distribution and Replenishment by the Calder Corporation and was also the president of Maxwell Value Chain. And also, moving on, we have IT, and we have Joshua R. Jewett, who is the Chief Information Officer. He has held this position since March 2016. He served as Senior Vice President of Information Technology and Procurement at Family Dollar since 2002. And he was also employed at Answer Think prior to Family Dollar. Finally, we have consulting and strategic planning. We have Mr. David A. Jacobs, who is the Chief Strategic Officer. He has held this position at Dollar Tree since 2012. He was the Senior Vice President of Strategic Planning from 2009 to 2012 and Vice President of Strategic Planning from 2006 to 2009. He has also held a number of positions with the Boston Consulting Group, who is a leading global strategic management consulting firm. Now I'm going to pass it along to Maggie, who will be walking us over Dollar Tree's balance statement.
Thank you, Pamela. Due to the Family Dollar acquisition, a massive amount of debt was raised in 2015 to finance the deal. In fact, nearly $7 billion was raised. But as you know, debt has two sides. On one side, it increases the returns on equity back to shareholders since it is tax deductible. But on the other side, more debt in the capital structure increases the cost of debt as well and the risk for bankruptcy. So in other words, Dollar Tree is now more leveraged. Another important aspect to note is Dollar Tree's shareholders' equity. As a measure of their net worth, their shareholder equity rose from $1.7 billion in 2015 to $5 billion in 2016. This is due to a substantial increase in the capital surplus and retained earnings from the Family Dollar acquisition. We also saw the Family Dollar brand equity added to the balance sheet. This resulted in an increase of a new brand equity worth $5 billion in 2016. Moving along to the income statement, despite a doubling in the increase in sales since the acquisition, Dollar Tree's cost of goods services also increased. This is due to the fact that Family Dollar, which is now on these income statements, typically has a higher cost of goods sold, resulting in a lower gross profit margin when you compare it to Dollar Tree. The combination of these two new entities resulted in an overall decline in the new gross profit margin. However, in a recent earnings call from the Dollar Tree, management indicated their belief that this is a temporary decline and the gross profit margin should hopefully bounce back with the continued streaming of operations. It's interesting to point out that while the gross profit margin did decline, the gross income grew from $3 billion to $4.7 billion. In comparing 2016 second quarter to third quarter, which just ended on October 31st of 2016, the gross profit increased 5.6%, up to $663 million. Despite the increase in gross profit dollars, net income declined to $282 million in 2016. This is due to increases in expenses from absorbing Family Dollar, which included the $6.5 billion acquisition costs and the new expenses associated with Family Dollar's operating spend. As a result, the earnings per share declined in 2016 due to this decrease in net income. So while the number of outstanding shares did increase slightly post-acquisition, the overall reasoning remains the decrease in net income for the decline in the earnings per share. But can they use cash to help offset the cost of this decline in their net revenue? Due to the $8.5 billion Family Dollar deal, their recent cash flow has seen some flux. Working capital resulted in an inflow from their accounts payable, but their other assets and liabilities within the working capital grew substantially, with a $239 million outflow of cash. In their investing activities, it also saw some changes. There was a cash outflow of $24 million from the purchasing of investments, which was counterattacked with a $53 million inflow of cash from the sale and maturity of investments. But lastly, in an attempt to bring cash back into 2016, Dollar Tree received an inflow of nearly $14 million in cash from sale of their common stock and preferred stock. And they also received a $6 million deduction in their long-term debt. Combining results into a positive net cash flow of $6 billion. However, these cash changes did still result in an overall change in their free cash flow. As you can see, year-over-year comparison, free cash flow decreased 50%, despite an inflow of cash from the sale of their common stock, but it was due to the various expenses needed to fund the Family Dollar acquisition. Now I'm going to pass it over to Chad to discuss competition.
Thanks, Maggie. So let's take a step back and look at our SWOT analysis. So as far as strengths, we have an expansive store network, we have a great brand, and we have experienced management. Now, as far as weaknesses, we have $6.9 billion in debt, which reduces our earnings and it could limit our long-term investment. And also, Family Dollar margins put pressure on the overall earnings of the business. Now, we do like some of the opportunities that we have, especially on digital and in-store capabilities. Now, there are some threats. We're concerned about inflation and its effects both on costs and prices, especially given Dollartree's $1 price point constraint. There is also some uncertainty related to import tariffs, since we do source a lot of our goods from overseas. And of course, there are threats from competitors, such as Walmart and Amazon. They're always lurking. And they are testing convenience stores and grocery stores. So now what? How are we going to compete? Well, first, we want to convert more Family Dollar stores to Dollar Tree stores where it makes sense. Dollar Tree stores have better margins. They have a little bit of protection in the business due to the $1 fixed price point. And they have a proven model with 35 consecutive quarters of same store sales increases. And on the Family Dollar side, we know that the convenience store business is tough. And it's going to get a lot tougher, especially if Amazon is coming. So we think that Dollar Tree stores give us a better chance to succeed. Now let's take a look at our investment in infrastructure. Now our team went out on a store visits, and we noticed that inventory levels were either too high or too low. And really, our business is all about the right inventory at the right place, at the right time. This is vital to our business. And the faster that we can turn the inventory, the faster we can generate that cash to buy more inventory or reinvest that back into the business. And as far as distribution, we need to continue to integrate, and we really need to fully integrate between Dollar Tree and Family Dollar. And this optimization will lower costs across the business, which will improve net income. And in-store, this is where we're a little bit behind here. We need self-checkout. We need a more efficient, modern layout. And we need to make sure that we're keeping our shelves stocked and organized. Look, we know that the Dollar Tree model works, but it can be much more efficient. So let's invest in our infrastructure. Once these infrastructure improvements are in place, we expect that this will result in an increase in sales and a lower cost structure, which will add value to the business. Our customers are all about finding the deal. So let's enable the hunt. We really need to invest in customer technology because our customers, they have mobile phones and they're already shopping with them. So this trend is only going to continue. And we are a little bit behind the competition in this regard, so we really need to move quickly. We need to invest in those digital tools now. And you might be asking yourself, why does a dollar store need this technology? Well, the research is telling us that half of dollar store shoppers are already using these digital tools. And a third are extremely or very eager for dollar stores to join the omni-channel age. So really, let's give these tools to our customers. We want them to be able to find our stores, to get store information, to look for inventory, new arrivals, and the ability to order online or with their app, and to be able to pick up these items in the store. We expect that these tools will impact sales immediately. And in closing, by converting Family Dollar stores to Dollar Tree stores, by investing in infrastructure, and enabling the hunt for our customers, we feel we're in a good position to compete long into the future. Thank you.